Alright, sorry guys, I had to reboot my machine. That takes some time. Anyways, welcome to Forex.Today. The YouTube community of more than 20,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis with the overriding goal of planning our trades in advance because we're trying to reduce our risk. Well, why would we want to do that? Because trading is risky and not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. Now there's no mic? Okay, now there's a mic. So anyways, hey, let's start over again. Thank you, Johnny. So, hey, my name is Wayne McDonald. I'll be your guide on this thing called Forex. I apologize for being dressed casually today, but I have a work crew on the way. And, well, we're going to get some work done on these 2 acres. 2 acres! So, anyways, why do that today? Well, today is kind of a recess day because tomorrow is a huge FOMC day, right? So right now, I don't think new money will be deployed in the market. Old money might come out of the market, but new money might not go in. So anyways, it's sort of, I wouldn't call it a dead day, but if you were going to take, if you're going to take a step away from the computer, today would probably be the day. So anyways, we'll burn through the charts. We'll talk about that RBA. We'll talk about the FOMC. And, we'll look at the commodities. I anticipate gold, oil, and Bitcoin. We can crunch through that. And then we'll move on.com. We'll hurry up and wait. So anyways, look in the description below. There's a link to my book, Strategic and Tactical Forex Trading. There's a link to my community, fxbootcamp.com. There's a link to my what would you say, macroeconomic Quant-in-a-Box. It's artificial intelligence sitting on top of the Google Cloud, gathering and grading and organizing and displaying macroeconomic data from private and governmental web sources, databases, and helping you put together the importance of things like seasonality, COT data, GDP, inflation, jobs and employment, technical trends. It does a lot. That's quantbox.co. You also, in the description below the video, there's a link to tradersway.com, a trustworthy, ethical foreign exchange broker. Yeah, there is one. There is one. Tradersway.com. I've been recommending them, I think, about 8 years now. Okay. There are many Forex trading brokers out there, but this one is mine. No, I don't own it, but I recommend it. So check it out. Do your own due diligence, but they earn my loyalty and respect. Tradersway.com. Okay. Okay, my WTI, you can see we've been in a downward move for quite some time. Quite some time. And in fact, if you go further back, quite some time. Notice that what we ended up doing is falling to my support line, and now we've bounced, and now we're in between. So now we're really waiting for the Fed. Is the Fed going to put us into recession in the second half? If yes, oil will probably come down. If no, then oil will probably go up. So I can't tell you which one because I don't know the future, but I can anticipate the importance of tomorrow's meeting. Nonetheless, we can look at what technically is happening here. Technically, this is still very bearish. Okay? And we also know fundamentally we have average levels of oil in inventory. So up or down isn't necessary at all. If we're at average, then whatever this is should be roughly okay. Okay, so really it comes down to tomorrow. Is the Fed going to put us in recession or not? Well, there you go. That's why things are tight. All right, so yeah, S&P 500, we're waiting. We had that nice little move, and now we're sort of just waiting for the grass to grow, waiting for the wind to blow. Okay, and you can see we got, it almost looks like a head and shoulders. Be careful. So anyways, it's not necessarily that, but we are waiting for that giant Fed meeting, and I wouldn't necessarily call that a head and shoulders, but I would call that support. So we'll see how tomorrow goes. Obviously, it comes down to the same thing. Will the Fed put us into recession by the end of the year? Yes or no? By the way, if you are a member of FX Bootcamp, a video-only membership, which is $88 a year. So even if you don't have one, why don't you just buy one? $88 a year. Okay? So let's do it this way. If you're a video-only member of FX Bootcamp, you are invited to a special event tomorrow where we cover FOMC live. If you're a member of the Swing Trading Group, which is $99 a month, you are invited to a special event tomorrow covering the FOMC live. If you're a member of the Day Trading Group, well, the Day Trading Group meets Sunday, Monday, Tuesday, Wednesday, Thursday. But you also get a swing trading membership and you get the video membership, and that's $199 a month. You get everything. Amazing, right? So anyways, so if you're a swing trader, day trader, video only, if you have a membership at FX Bootcamp, you are invited to a special event tomorrow where we cover FOMC live. So when I say things like, if the outcome tomorrow is that the Fed's going to put us into recession by the end of the year, well, you're like, well, how do we know that? Well, why don't you come to the event? Cool. Anyways, I discussed it yesterday in the Day Trading Group. Wink, wink, nudge, nudge. Wink, wink, nudge, nudge. Emerald? Right, Emerald? Emmy, E-Man. Okay. Yeah. Bitty, bitty, bitty. Can't you see? Sometimes your trades just hypnotize me. So if you're looking for some vol, oh my God. You can have it here. Johnny says, are you saying another raise will put us in recession? I don't care about tomorrow's announcement. So I don't even care about tomorrow. except for the press conference in which we will learn about the June 14th meeting. So, like, I doubt they'll surprise us. But did you guys trade the RBA? Why don't I just skip to that? Screw you, Bitcoin. Did you guys trade RBA? Which one should we pick on? Kiwi? No. Yen Yen? Yeah, I guess Yen Yen's good. Okay, cool. Okay, so couple of things. I guess I got to get my drawing tool. I don't have it going because I had to reboot. Okay, check this out. This is the Bank of Japan meeting I covered to death. So you should know Ueda's plan for the Bank of Japan and the Japanese economy. I covered it before it happened and covered it the night before the actual announcement. Covered it the day after it happened. I even put a trade on so we can follow a trade. And it's going and going and going. Everything's good. So everything up until about here is Japanese yen weakness. So why did we get this giant green candle last night? The RBA raised, but they were paused. RBA raised last night, surprised the market. Now, you could read into that, wink, wink, nudge, nudge. Huh? Did the Fed give him a call? You never knew. Remember, this matters because there's swap lines and all these different things that go on globally. And I don't know. Somebody might have gotten a phone call. But anyways, RBA raised interest rates even though they were paused. And that was not priced in. So what's your plan today, son? What do you stink? Is that right? Well, 303, all I'm saying is, in general, on the aggregate, it was surprising. Doesn't mean it's not unwarranted. So anyways, yeah. So we got FOMC, we have BOE. We got a lot going on this week. And it started off with the shotgun bang. Yeah. You know what I'm talking about? So anyways, Coolio, whatever, mark your lines, just do your job. Okay, let me clear that old trade. Okay, so anyways, you should already be well into your yen trades. And now, this fundamentally can change your outlook for the Australian dollar over the short run. Okay? Things are happening, bro. You can't be last week. Things are happening. Okay? We're talking about yield curve control, brother. Pop up the volume, pop up the volume, pop up the volume. Dance, dance. Okay? Aussie buck. Look at that, huh? Look at the Aussie buck. Dang, boy. Okay. So your strategy you might flip your pivots, right? Weekly, and you might be a bull. Oh, that's not the one we want. Anyways, we want this one, bias pivots. There we go. Okay, you say, well, you know what? Oh, I know what I want to comment. I forgot about that. Okay, here's what I want to comment. You may not know this. Sometimes, as a coach, I have to figure out what you don't know, which is difficult. That's why I hope you ask questions. In the history of the RBA, in a scenario like this, what they tend to do is raise, pause, raise, pause, raise, pause, stop. Okay, so you want to kind of keep that in mind. There's a raise followed by a pause, followed by a raise, followed by a pause, followed by a raise, followed by a pause, followed by a stop. Okay, they have a history of doing that. Now, they have different leadership and stuff, but the culture still might be there, right? The legacy is still there. The coach and players are different, but the locker room's the same. Okay. Now, 303 says Euro Yen up. I have a problem with that based on what we learned tomorrow, 303. That could be a devastatingly bad trade. So everything that created this up totally makes sense. The idea that it's now not going up also makes sense. And based on tomorrow's move by the Fed, and it's not really tomorrow's move, it's the press conference, one particular outcome could be a move like this in Euro Yen. I don't know if it'd be that dramatic, but I would at least be aware of that risk being there. So you're like, oh, it's going to go up 800 pips. Yes, in a certain scenario, but you may not get that scenario. You might get the opposite. You might be on your way to 149 and not, right? 149, not 159. So I'd be cautious or be ready to hedge or at least have a contingency plan for being wrong. Okay? So I don't disagree with probably the technicals there, although I'm not even looking at it that way. I guess I could. So you're doing this. Let me get, you got this bullish. And that was true up until about late last week, but let's take a look at what you got going on. Well, even your 159 doesn't technically make sense to me. It would take a couple of months, so it's plausible, but not really there. If I take a look and adjust this a little bit, I would have to use a different setup. So I can see 155, but not 159. Let me switch to a longer term template. Let's check out your 159. I know you're playing the psych level, of course. No, your 159 doesn't make any technical sense, but fundamentally, I get what you're getting at. But we are at an R1 going into a Fed meeting, and there is a scenario of down. Although yield curve control you would expect up, but yield could come down in one particular scenario tomorrow. So if we get through tomorrow and it doesn't collapse, then yeah, sure. I would say 156 to 162. So there's a little more meat on the bone that you're giving this but I'm okay with that. All right. But we got to get through tomorrow, 303, to confirm the Fed policy before we start talking 159. So I'd say I would say technically this is sort of 50-50, but I really do think many, the vast majority, in fact, of institutional market participants actually have this wrong. Now, I'm ready to be wrong. I want to go in confident in my research, but not arrogant. Okay? But I think this is very real tomorrow. Very real potential. It could happen. Like, I would say greater than 50% chance. 70% chance that the Fed surprises the market. The market has priced it in wrong. So I would just be careful. Now, if I'm wrong, I'll know by, 3 o'clock tomorrow afternoon. And if I'm wrong, well, no harm done, and we're on our way up. And if you're thinking 160, yeah, you might get as much as 162. But at that point, who cares, right? So anyways, now, if you were going to sell something, I would, if you were going to buy euro yen, okay, I get it. In a bullish move, that is the right thing. But there might be other things to do. But anyways, fine. Okay, here's my yield curve control play. I'm in at 133.5, actually lower than that. I'm in at a better price than that, 133-ish. So let's call it 133.50. And now I'm at 137.50. That's 400 pips, boy. Oh, that feels so good. Let it run, sucker. Don't be a fool, sucker. I think I'll move my stop to break even. They always say the first 400 pips are the hardest. Let it run, son. How about that, huh? I put this order in during the day trading group to show how to put in an order and how to adjust the risk and how to collect the reward, huh? Shalanka Lanka. Yeah. How many pips do you want on this? How about, where am I? 135, 140. Am I in 133? I'm in at 133. So 43 is 1,000. 53 is 2,000. Let's go to 63. Let's go for 3,000 pips. There it is, 3,200 pips. No, let's be more conservative. 3,000 pips. Oh, I grabbed the wrong one because I'm zoomed out so much. Well, let me do this one. Hang on, I gotta move it. There's too many lines. I'm too zoomed out is the issue. Hang on, I'm just too zoomed out. Nobody. Okay, there we go. So I'll move that up to 3,000 pips. Boom. 3,000 pips. I'll move my stop back to break even. So we'll see. Okay. All right. Let's take a look. Now, if the Fed appeases the market tomorrow, that trade will have to come off. And I'll probably only get 300 pips profit. So I'll go from 3,000 potential to 300 in the bank. But we'll see. Yeah, that's the downside, right, Barry? Hey, Barry, this weekend I'm opening a box of cigars. It's still sealed, so obviously the box is wood, but it's still sealed in the original plastic. The box is 25 years old. It might actually be a little older. I forget the year. I don't remember the exact year. 97, I think. So anyways, this box is cigars from 1997. I have some friends coming over, and I'm going to take it out of the Humi and crack that open. And smoke those cigars. Can you imagine how good that's going to be? And they're all Maduro, so they would have just turned into like chocolate cake. Like crazy, right, Barry? You're like, wait, what? What did you just say? The cigars have been in a humidor since 1997. Yeah. Yeah. I mean, it's dumb, right? No, not 1997. Yeah, 1997. Remember? You were dancing to a Prince song called Party Like It's 1999. You're like, wait, what? 1997. Holy shit. But I'm finding like a lot of the things I collected over the years, apparently I'm getting older. So I started collecting wine in I think I have, the most expensive bottle I have is like 1991 or 1992. Cult Cab out of Napa Valley. Never sold in a store. And I'm like, I can't drink that now. It's too old, right? It's too old now. Now I can never open some of this stuff. I have stuff from the early to mid 90s, collectible bottles of wine. And now I can't open it because if I open it, what happens? You find out it's shit wine. It's all turned to vinegar. And you're like, now it's worthless. I'm like, what? I can't sell it because it's too dear to me. So now I have to sit there and my kids will sell it when I'm dead. And some other idiot can buy it, open it up, and find out it's vinegar. At least it's in a proper wine cellar, huh? But anyway, so for those that like cigars, I thought you might find that interesting because it's weird, right? You're like, that can't be true. How could he have an unopened box of cigars from 1997? Well, hell's bells. It's going to be a great weekend. I have friends flying in from all around the world, and we're all just going to hang out by the pool. It's going to be good. I'm going to check when are these workers showing up. ETA question mark. All right. I remember the first cigar I had. That would have been 1993. All right. Well, it'll be interesting. I don't think we're going to smoke them all, but you never know. There's only 12 in the box, I think. So if I have one left over, I'll show it on camera maybe on Monday. Euro Mexican peso. That's a weird one. Interesting. Why would you do that one, Grumpy Cat? Just so you have one currently raising interest rates and one with a high yield. Like I don't know which way you would want to trade it. I wouldn't know if you're a bull or a bear on that one. So help me out before I look at it. Help me out. Like, well, what's the main catalyst for the trade and what direction are you going? Like you wouldn't sell the Mexican peso to buy euro. So you think euro's going down. So let me think of it. You think euro's going down, so the Fed's raising interest rates. Euro is going down, but that could also negatively impact, at least on the short run, the Mexican peso. Like it's confusing. Don't they offset each other? Yeah, I don't want to look at that. I don't want. Sorry, I pass. Sorry. Yeah. No, well, under certain circumstances that would make sense, but you couldn't buy it, so you could only sell it. And I get that. But based on the outcome of this week, it's very plausible that they offset each other and that it wouldn't be the best trade. It would be a trade, but it may not be the trade you want. It might actually go up. Despite euro dollar going down, euro Mexican peso might go up because USD Mexican peso would be going up. And I'm confused on it. So anyways, I pass. Sorry. Let's take a look at gold. And mass confusion there, huh? Mass confusion. And I take a pass on that one. Again, I think there's a high probability that gold drops significantly tomorrow. Okay. Like, yeah, back to 1900, let's say. I don't know about all tomorrow, but, you know, I think we could be on our way for something like this. Okay. Okay. Which means the economy is not going well. We go into recession. I hope you make a bunch of money as a foreign exchange trader. And while we're at the doldrums of recession, you decide to look at timeshares owned by Americans in places like the Caribbean or the Mexican Riviera. So like the Ritz-Carlton and St. Thomas, they've been trying, they have opportunities, let's just say. I think in a scenario where we spend 3 or 4 or 5 or 6 months in recession in the United States and people start losing jobs and they start getting worried about the future, I think you'll be able to get a better deal on some of those Ritz-Carlton timeshares. They don't call them timeshares. They call them fractional ownership or whatever. So you can own your little villa at the Ritz-Carlton in beautiful St. Thomas But I think you can get a better deal if you wait 3 or 4 or 5 months. And all of a sudden, nobody's buying anything. Yeah, baby. So what you do is you make your cash now on the way down, and then you convert your cash into an awesome lifestyle. Well, that's the thing. Like instead back then, like load the boat with stocks. You're talking about 6 months from now, right? Well, it'd be interesting, and I'm playing with this idea now. Like I want to start this endowment charitable fund. The lawyers have told me I can only do this with accredited investors. So if you're a millionaire, I can help you. That's what they said. Some of you are not millionaires yet, so I wonder if there's a legal way for me to like start an investment club and I tell you what I'm going to do. I think that's legal. I don't do it for you. But wouldn't that be interesting if we do it that way, where it's a subscription service to a club? And I'm like, all right, I'm adjusting the portfolio construction in the next, this month because of what I believe to be X, Y, and Z fundamental conditions coming in the next quarter. So I'm moving from low beta to neutral beta and changing some of the money going into here. I'm going to be putting some of the money over to there. I'm going to be relying more on this. I'm going to be relying more on that. But, and I wonder if I'm allowed to do that. I just tell you what I'm going to do. And then you got to go do it. But again, this should be done in a retirement account because one of the risks of my portfolio is it makes way too much money. It makes too much income. You're going to get hit by a tax bill if it's in a taxable account. And that's one of the weaknesses I have to put in the disclosure document or the private placement memorandum is this strategy makes too much money. Not just, oh, well, the value of the stocks went up. Yeah, but that doesn't put money in your pocket. My fund puts money in your pocket every month. So anyways, maybe I'll talk to the lawyers about that. It has to be bigger, Iceland, right? Icelanders. No, I don't think I'll go that way. That's it's good, but no. Oh, no. It becomes burdensome. Burdensome. I don't know. It's a burden. But I get that, but no. No. Maybe down the road. I would like to consider it more like, I don't know, family office isn't right. Like, here's the thing. Here's what it is. I guess that I could, but of course that's expensive, but I could. But really, you have to understand my catalyst. There's a couple of things. I'm going to do it for me anyways. Cool. So that's that. The second thing is I'm in a period of my life. My kids are going away to college. So I'm in the third, what would you say, the third quarter. And I want to have continue to have a meaningful contribution back to society. So but running an ETF, you don't know people, you don't know your clients, you don't have a personal relationship. It's just, I don't know, making money. It sounds like I don't know. It just sounds ugly to me. Sorry. Right? Like, That's not the spirit and essence of what interests me, I suppose. So knowing and taking care of the people around me, it would be rewarding. And when you add up the numbers, it's really not financially that rewarding, but it's emotionally or spiritually rewarding, right? It's a reason to live. It's a reason to get out of bed. I want to do this while I'm 80, right? Certainly 75, but more like 80, right? I'm not that old yet. So like I want something meaningful for the next 25, 30 years of my life. Running an ETF? Nah. That just doesn't sound like fun. You know? Like that just doesn't sound like fun. You know what's fun? I used to do these things called boot camp or jamborees, and we'd get together. And the last one we did, people in the room were crying. You understand, like, the power and the meaningfulness of our community is just overwhelming. People put so much time and effort and pain and blood, sweat and tears and loneliness and isolation and, you know, issues with work and issues with family and issues with all kinds of things that go into this. And we have to fight so hard and it's so difficult. And when boot campers get together, we understand. And it's like it's the only group that understands and have done exactly the same thing. And so when we get together, it always starts out with smiles and hugs and handshakes. And 3 hours later, people are in tears. And it's a good, meaningful thing, you know? So running an ETF doesn't sound like it has that spirit to it. Yeah, I was a VC, so I already did all that. I ran a nonprofit, I already did all that. Yeah, I've done Forex for 20 years, love it. And on top of being a Forex trader, I want to help people invest their retirement account because I don't think it's done right. So there you go. Yeah, and I think that's meaningful. I want to take care of people. Take care of their money. I can't solve your problems at home, but I can make sure your money is there when you're too old to work. That sounds like a meaningful contribution to society, something worthy of the next couple of phases of my life. Yeah. That's it. I discovered it. It's really a powerful thing. Emotionally for me, I discovered it. I have meaning. Imagine that, meaning. FX Bootcamp brings that. Oops. And I think running a retirement fund, an endowment fund. So like I literally can see the website right now where it says there's 3 funds. Total return fund. So if you're under the age of 65, you compound that account like cray-cray so that when you retire, you have a lot of money. That's the whole idea. When you get to 70 and a half, you have a lot of money. And for many people that are 40 or 45 or 50 or 55, your kids go to college and then you look at your retirement account and you go, oh, snap. The kids have really drawn down my savings, right? I mean, dude, you understand I need $500,000 to send my kids to college? Like, it's crazy. So when that's all done, you look at your retirement account and you're like, ooh, I'm behind. I'll help you catch up. So that'd be a total return fund. And then there's those that are actually retired. They're 65 or higher. Maybe they're 70 and a half and they're forced to take income. Okay, so now that's an income fund. It's the same fund, but instead of compounding your income by buying by building your portfolio, you're actually taking money out every month. Every month they'll send you a check. Because you're retired, you're not working. So the idea is for every $1 million, you should have 3 million saved, but whatever, life's life. But for every million, imagine I can send you a check somewhere between $8,000 and $12,000 a month, every month. Can you live on that? I don't know. But can you imagine that? So that fund, same fund, but different, you're not compounding anymore so that you don't have a total return. You just have income. I'll send you a check every month and you live on the check. See, I take care of my sweet baby. The third one would be a charitable fund because you have way more money than that. And you're like, Wayne, I don't need I don't need 25 grand a month sent to me. You're like, I don't need it. So what we do, because a person like that already has tons of income, already has all these things going on in their life. They have way more than that. That retirement account was a tax strategy, if you will. And now they're forced to take income at 70 and a half. But what if you already had 20 or 30 million? You're like, dude, I don't need this money. So because that money they start getting sent to them is income again, and now they pay taxes, and now they're right back to the other problem. But when you're 70 and a half, the government forces you to take the money. So what I do is I set up a third fund, and it's a charitable trust. So you avoid paying taxes the whole time, your whole life. And then it's compounding your whole life. It's exponentially growing your whole life. Then you hit 70 and a half, and now you're forced by law to take the money, and you still don't need the money, but the money has grown and grown and grown and grown and grown over that lifetime. And now what you do is you tell me what charity it needs to go to. You're forced to withdraw the money out of your retirement account, and then it goes straight to charity. I just do all the paperwork for you, make the arrangements, and it goes straight to charity, and you get the tax write-off because you're making money others in another place because you're quite wealthy. Do you understand? So there's those three things: total return, income, and charitable. I love it. I'm like, I love it. I love it. Okay. Sebastian says, like a hedge fund, maybe. Well, it's definitely a hedge fund, and it's definitely hedging. There's no way to lower your volatility and bring in income without hedging and derivatives, really active portfolio management. Like, there's just no way to do it. Yes. Yeah. So anywho, Bitcoin, if it's heading down, it's showing risk off. If it's heading up, it's showing risk on. So it really comes down to your point of view of what it's doing. And point of view is really time frame. You know, Einstein's theory of relativity, what he's saying is it depends on where you are in space-time. It's relative to where you are in space-time. So you can be a bull and I can be a bear, and it's relative to where we are in the price-time continuum. Price is on the right, time is on the bottom, and I can be a bull and be perfectly right. You could be bear and perfectly right. It's relative to the time frame. Yes. Yes, Richard says he's watching a video on Quant Box. Yup. Okay. There's currently now 131 videos with Quant Box. You guys want a link to this? I just brought that up. Might as well, we can take a quick lookie. I had to reboot. I guess I killed it. Do I have an account? I never remember if I do. Okay, so I got to fix that. Yeah. All right. I think this is a retail sub. As you can see, it's not a web page. It's actually in the Google Cloud. It's creating all of this from a database in real time. I know, right? Wicked smart, right? And you're like, Wayne, it's really hard to see. Oh, did you click the full screen button? Oh my God, it's the most beautiful thing in the entire world. You're welcome. Okay, Bitcoin is down and it's supposed to be down. But a lot of things are not. Everything up here is up, but it's not really supposed to be. But realize that this will Aussie and Aussie and Aussie. So on Aussie, obviously a little bit surprising. And then Aussie pulling Kiwi up with it. So there's a lot of surprise here based on that RBA meeting. Everything over here was up and supposed to be up. Everything down here is down and supposed to be down. And these things are down but are not supposed to be. So it's a bit of a mixed bag today. A lot of this has to do with that RBA meeting. Okay. Looking at the stock markets around the world, you can see that big drop in DAX relative to what everybody else is doing. You see that? So like yesterday, everything was up. Okay. As a basket, up 4% yesterday. Well, today as a basket, up 2%. But the thing is, S&P 500 flat, Dow negative. Okay. So everything's up, but look, big drop compared to where we were in the DAX, huh? Or do I have DAX right? Green. No, that's the Dow. So the Dow was up almost 1% yesterday and now is negative. So that's the big drop. So the green is the Dow. So a little bit of a, I wouldn't call it risk off, but this is the conservatism I'm talking about. Like no money, no new money coming in. And if anything, some people will take money out before the big event tomorrow. So there's definitely a consolidation going on just based on what's been happening in the last few days, huh? Okay. So over the last month, USD yen up almost 6%. Hey, that's the one I own. Look at that. The biggest winner. The biggest winner. Huh? The biggest winner is the one trade I'm on. You're welcome. Okay. USD yen up 6% this month. USD CAD up 1.3. Aussie dollar down 4.61. You see? It's the same thing as these top ones going up because of the dollar being on the numerator on the top three and the dollar being on the denominator on the bottom three. So the bottom four. So the bottom four should be negative, and they are. The top three should be positive, and they are. So what's the common thread between these numerators and denominators? Dollar. Dollar strong. Lovely. That's risk off, brother. With your smile so worn and your teeth so green. Look at the Aussie dollar. Strong sell. -8. Oh my God. I don't even know if I've ever seen a -8. Gee whiz, hey, Quant Box? Hello, hello, hello. Oh, yeah. How's your mum? Dang, boy. Okay. Yeah, boom, boom. Yeah. Down, 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 down. Okay. Institutional investors, 63% short Aussie, 64% long dollar. Look at retail sentiment. Nice. Now they're fine. See, that's all right. Okay, 60-40. The thing is, it should be short. There's no doubt. I'm laughing because it's only 60%, right? But anyways, when you combine this, okay, 63% short Aussie, 64% long dollar. GDP favors the United States. Inflation favors the United States. Employment, even Steven. Yeah, see? Employment, 0. Interest rate differential favors the United States. Okay, there's a positive carry between the two. I wouldn't call that a great carry trade, but if you're short, you're going to earn some money. This is technical analysis, projecting down as low as 66, but maybe only down, so worst case is 67, best case is 66. Very interesting. Now, if this clicks, this will change. So that'll actually, too many retail will be on it. So longer term target is even as far as 65. It's kind of interesting. So we could try to take a look at that. Lovely, with your smile so worn. Now remember though, the Fed, RBA has raised interest rates, so that could change things. But nonetheless, we were up and we were talking down from 67. Remember, right? Remember, we were just talking about it. The worst case scenario was it was going to pop to 67 and then drop to 6, right? Eventually down something like that to 66. Longer term, which is probably going to require an up and then a down and then an up and then a down. But eventually it could go as low, if you're long term, as low as 65. So you got to look at this on this chart. So what it's saying here is if you're a bear, oops, and you sell up in here, Okay, 65 is the next move. I would argue even a little bit less, but whatever. So that's what it's saying. Oh! But, you know, it may be changing. We'll see how the RBA plays out. But I remember next RBA meeting, people are going to be shocked, I tell you, that the RBA pauses. And then they're like, okay, now they're done. And then they'll be shocked after that when they raise again. And I'll say, well, I just happen to know the personality of the central banks. All right, I'm spent. I'm tired. It's 9 o'clock in the morning. I'm exhausted. Crazy cray, huh? Welcome to the life of being a currency trader. So watch those yens, watch the Aussie and Kiwi. Those are the big movers of the day. And then we'll probably have the giant sucking sound of the Fed meeting coming up, and it'll suck the vol out of the market. Suck the volume, not just volatility, but volume too. And then, well, there you go. Fed meeting tomorrow. So remember, if you're a member of FX Bootcamp, video-only membership, day trading membership, swing trading membership, on Wednesday afternoon, about 1:45 p.m. New York time, we will gather as a tribe of currency traders. We will get the announcement, and then we will listen to the press conference, and I will translate everything into English. If you're in my day trading group, yeah, we'll get together. Huh? A quickie at 4 sounds good to me for catch the close. Peace on earth. May the pips be with you. May your profits be above average.